Ladies and gentlemen, welcome to another midday market monitor where the S&P 500 is down 0.3% today and the Nasdaq is down 0.66%. S&P 500 now at $7,680 plus dollars on the index here. That being said, although there is a lot of red equities, it's not the only asset class that you should be following today. We also have crypto, weirdly enough, that is seeing quite a large jump up. And this is actually leading to some pretty interesting price action, finding new potential highs on, well, not new potential highs, new potential recent highs, higher than in the last 3 months, which is going to bring up a lot of those stocks like potentially Robinhood, Coinbase, even BMNR. Obviously, bringing up those positions a lot. And, I've been talking about those companies and they've definitely not been in vogue for a long time because Ethereum has been down. But if you can have these types of price reactions, which if you go back in history, these price reactions on Ethereum every time, they are usually not short or spread out gains. Whenever they do decide to go up, they go up extremely quickly. Those appreciations on Ethereum, you can see multiple times over, have been in very quick succession. Okay, going back as much as $86 per ETH, and taking not that long, less than a year to go all the way up to 4,800, or going from back in October around 1,500 up to 4,000. Or from 1,500 back in April of 2025 up to 5,000 in August of 2025. So as these moments happen where we continuously sell off, regain, sell off, hit new highs, which has been happening for quite a while, is that the potential that we just ended up bottoming out at 1,500 once again and are now looking to start to reaccelerate? Who knows, right? But we are starting to see some buying activity, which is exciting for companies like Hood, which obviously does make a lot of their income from crypto. In some quarters, like back in Q4 of 2025, that has made up somewhere around 32%, if I'm going off memory, 32% of revenue. I think in the most recent quarter, somewhere around like 15%, or maybe even less than that. So they've not needed crypto in order to grow, but it is definitely, they will be one of the larger beneficiaries because they have such a large stake in crypto. A lot of their users have used that platform for crypto. They're known for crypto. And so if crypto comes back into the trading space, then obviously active investors will look to take stakes in those companies or stakes in those assets. So Bitcoin is well back above 70,000, almost 73,000, and continuing that climb on a minute-to-minute basis here, finding new intraday highs. What's the likelihood that you guys think that we are now about to enter back into a crypto bull market? Is the winter over, right? That's the big question. In this video, I want to cover BMNR. That will be something that we end up doing. Not right away. I still want to go through some of the stories that we are seeing right now, but BMNR has been a position of mine that has just remained extremely dormant. It's less than 1% position, but looking at the price action and where we've been previously, this could climb into a bigger position if it ends up coming, back into that sort of 5,000 or potentially even, reaching new highs. There's a lot of signs to point to say, hey, BMNR is not looking to head back to highs of where we were before. If Ethereum goes back to 5,000, back then we were at about like 1.5% of Ethereum's total supply being held. Now we're at about 4.8%. So that rip back to 5,000, BMNR is in a much better position now because they have such a high stake. And in fact, we'll go through that BMNR sort of like review, and now is literally the best time for them to see an Ethereum rip because cash is getting extremely depleted, and it would look extremely worrisome for BMNR if this had continued on for many more months. It would start to get very nasty. Now is a really good time. Okay, That being said, what's your view on Micron? Are you buying? Well, I'm not buying Micron here. I do have a position in Micron, but yeah, I'm not looking at buying this name, not right now. Too many things are changing. Like I find that it's you know, I was talking with Brad Freeman yesterday, and he kind of just said, "Hey, it's in the too hard bucket for me." Not that he doesn't believe that any smart investor can see what the multiple looks like. Any smart investor can see how much money they're actually making. I don't think anyone's questioning the financials. It's just a matter of what is Vera Rubin going to do? What are other chip suppliers going to do? Are they going to find workarounds? Are they going to need less memory? There's a lot of people that might suggest that, you know, the advancements in AI don't happen without more memory. That, you know, you can add a lot more GPUs and CPUs, but really it's the memory that's the current bottleneck that's actually going to allow for further progresses in model performance and actual use cases for, artificial intelligence. So you can lower the specs on the Vera Rubins, but that doesn't mean that they're at the same performance as they once were whenever the specs were, you know, obviously much higher. It's not the same product. Whenever they do those downgrades, it does affect performance. Okay. Tanner, have you discussed what you think the outcome will be for NVIDIA whenever they report earnings? I've had a hard time predicting stock performance in general. I don't know which direction stocks are going to go. I try to predict the financials of companies and then believe that the market, not on my time frame, and that's why I don't buy options, but on on the market's timeline, that they will actually be a weighing machine rather than a voting machine. So rather than simply the market predicting where artificial intelligence will go, which means, you know, how much sales will NVIDIA actually see, if I can predict the sales, then I don't need to predict what the market's going to think. I can just, you know, essentially hold on and see the appreciation in the stock if they actually do deliver, which they have been. And growth is reaccelerating at high margin. And, you know, I'm very excited to see that. And we've talked about that previously. I'll probably do some sort of, larger review on NVIDIA either Monday or Tuesday, but not trimming a share. I think that should be an obvious indicator that I'm extremely bullish on their report this quarter. Is it an inflection period? I mean, I would have thought the inflection period was quarters ago. And the truth is that I find that a lot of NVIDIA's, overall appreciation in the stock doesn't necessarily just come purely from their numbers, right? It comes from the stories, the continuous outperformance, the stories that Anthropic is continuing to grow in their ARR, the fact that OpenAI is reaccelerating after 5.6 Sol. Those types of model releases spells out a more bullish picture for NVIDIA long term. So in terms of what's going to happen on the report, I'm not expecting anything big, but I do expect big earnings. All right. Yeah, 50% of my portfolio is in NVIDIA. So obviously very bullish. Okay. Did I miss a donation? Paul, are you still bullish on light or fiber optics? Would you buy here? I am bullish on Lumentum. I would probably buy here. I don't think that we've seen the appreciation on a lot of the photonics trades, compared to what I think that the boom is actually going to see. But I think NVIDIA is really going to spell a lot of that out for us. And, as we continue this build out, this is not a 1 quarter motion, right? This is multiple quarters. And whenever we saw Light's numbers, I remember seeing that the stock ended up falling. It was absolutely ridiculous. We ended up seeing accelerated growth rates, better margins, and obviously more products ended up getting to really high scale. So it's not just CPO, but also NPO, near packaged optics, and extremely bullish on Light. I'm very happy with Lumentum. And Meta looks really good too. I actually just saw a thing on Polymarket that people suggested that Mark Zuckerberg is the most likely person to be the next trillionaire, higher than Jensen Huang. And that's not that Jensen Huang doesn't manage a bigger company, but it's also about the share of those companies that those individual, founders own. Mark is extremely young and owns a lot of Meta. This just came out less than a minute ago. NVIDIA plans China chip shipments with export compliant AI processors. That comes from the information. Okay, cool. I actually think we will see some China sales this quarter as well, just because of the previous reports that we ended up hearing from some White House officials that said that they were sending out shipments of, I think it was, it wasn't the B200. That's crazy. I think it was the H200s. H200s, the essentially Hopper Ultras. That is pretty interesting. Honestly, I've said my take 1,000 times, but it was a mistake to cancel the H20s to begin with, and had put the United States in a disadvantage. And honestly, I think that China has really recognized the third-party risk there. So they have to, sort of rebuild that relationship, but that costed AMD and NVIDIA and a lot of those companies a lot of profits. And it's not just about, funneling those profits to the, to the highest CEOs. It's not just about that. It's also the jobs that NVIDIA had for the customers who are delivering to China. Like, we had layoffs because of this. We had less taxes going to the United States government. Like, you want those sales to stay in America because it benefits the American people. Yeah. I liked your nightgown and nightcap and gown yesterday. Thank you. Thank you. I thought I would bring a little fun to the show. Okay. That being said, Moderna down 25%. This stock got brought up as high as $194 yesterday, which more than tripled their overall market cap. The market cap on Moderna is still $51 billion, roughly a little bit more than double where it was 2 days ago. So, it's not a complete sell-off, but was there an overreaction? Maybe. And now I don't know which direction Moderna is going to go based on their phase 3 trials of their cancer vaccine that they're potentially looking to develop. But obviously, this is going to be a little bit of a battleground stock, as there's probably a lot of unknowns, a lot of hype, and historically a lot of short sellers on that name as well. Okay. Can we talk about Nebius? Yeah, I think that people get really worried about Nebius's stock price more than, it's just extremely short-term thinking to forget about last quarter's conversations and the metrics that they ended up talking about and worrying about them raising $4.5 billion, which then ended up getting upsized to $5 billion. If you guys didn't hear that was the story of the day, and why it's falling even further was they raised $4.5 billion, and then they said, hey guys, let's upsize this. Let's bring this up just a little bit more, paying 4.5% on their convertible notes, which is due all the way to 2034. If you're a believer in Nebius's potential to scale and build out data centers, one, that's not a large cost for them to essentially accumulate. And those convertible notes are capped at an upsized price. So let's say the stock goes to $1,000 or something crazy between now and 2034. And honestly, that's probably conservative. If they do what they say they're going to do. They're not going to dilute at 1,000. In fact, they'll have to dilute at a much, much lower stock price, which, could potentially hurt investors because you have to essentially give out shares that are much, much lower at those capped prices. So let's say you're giving out shares at $350, but the stock is 1,000. You're giving out 3 shares for every one that you would have. But at the same breath, it's like, okay, well, if this raise had helped you even get to that $350 price or $1,000, are you even complaining about the dilution if someone ends up bringing you a multi-bagger? So I think that these convertible notes and some of the times that companies raise with equity or have, performance-based stock units, which is essentially a form of convertible senior note. If they don't perform, then they're just paying an extremely low coupon rate. If they do perform, then it turns into dilution. And at that point, you shouldn't even complain because you've already made a ton of money. And a lot of that is going to be based on $5 billion new dollars, which obviously they have an extremely high payback period. On the short-term deals, a little bit closer to 1 year. On the regular Q2 deals that they just showed off, it's closer to 1 year and 10 months. Their words, not mine. So, they'll be able to pay back that $5 billion really quickly. And then on top of that, and by the way, they could settle in cash as well. But on top of that, what happens to those data centers and the chips that are now lasting 9+ years? Over the course of after 1 year and 10 months, what are you able to accelerate your overall revenue growth to after that? Dilution's not always bad. Maybe in public equities, people get accustomed to, hey, companies should do buybacks, and they should not be raising additional capital. They should be able to stand on their own. But then you look at private companies, and they're raising constantly. And the number one thing that I hear about public investors and SoFi and Robinhood and all of these companies that are dealing with retail investors are trying to address is bringing companies closer, like allowing you to invest in earlier and earlier stages. And Nebius is as early of a stage as you could have purchased in. You bought this company as it was coming up with its idea. We didn't even Nebius was able to be purchased, I think, at a $16 price. It was unbelievable. So are the people who were buying Nebius originally, who were up 10x, 15x on those original investments, are they worried about the dilution of accelerating their revenue growth? What is your end goal? Is to hold on to a company that has the least amount of outstanding shares, or is it to, make money on your investment by letting managers of capital like Arkady do his thing and accelerate growth rates at 400%, 500%, 600% growth rates like he has? Who knows? Buy low, sell high, says Tanner, I'm listed as a winner of Hood's 5K giveaway, no payout. I DM'd you on X, not sure if there's anything you can do to help, but Robinhood support, no help. I wonder what 5K giveaway you're referring to. I know that they gave away gold, stuff like this. I would really double check to make sure that your giveaway is not a potential, fake email or something like this. Because Robinhood, and also what I don't know what. There's nothing I can do. I don't work for the company. But if Robinhood said that you were potentially not a winner, or you're saying they did no help, what, they left you on read, or it sounds like that could potentially be a false email. It's in the app and it's legit August giveaway. Okay. I don't know if it's in the app. What does the app tell you to do? I don't have there's nothing I can do about it. There's nothing I can do about it. Congratulations, though. I mean, if you did win, then I'm sure they will pay it out. They're not worried about the 5K. I promise you that. They're running a $100+ billion company. They have a lot more to lose to not pay you out $5,000 than if you have all the receipts and everything. And it is legit. They've got a lot bigger concerns than $5,000. Yeah, talk to support. And yeah. It's probably from the gold card giveaway. Okay. He wants to scam you, Tanner, and take over your account. Well, I don't see. don't see how donating me $5 is going to do that. But unfortunately, there's nothing I can do. Okay. Tanner, what's your opinion of Reddit at this price? I really like Reddit. It's in my portfolio. Continue to hold. They're growing quickly. It's not read, it's left on red. Okay, whatever. I get what you're saying because you've read it. It should say left on red. I understand. And I get you. I don't know. I've got myself in a habit of saying read, and you guys all know what I was saying. So, dude, this is wild. I saw this story come up the other day, or sorry, not the other day, earlier today. And we've seen a bunch of these reports, but it's just wild that this is happening even with the biggest organizations in the world. This is Oracle spotting like extremely critical in terms of the severity of vulnerabilities that they're finding. They have access to a model that's not out right now, Mythos Preview. Okay. This is like the non-watered down version of Fable 5. It's much, much smarter. The benchmarks on Fable 5 are nowhere near Mythos Preview. And you can see how much those spots of overall vulnerabilities, and this is not cumulative. You know, you can see how they're finding new ones constantly and how much this is just completely ramped up. So each and every what looks to be monthly reports are actually finding more and more vulnerabilities that hopefully are getting patched, solved, making Oracle safer to potential disputes in the future. Pretty wild. Nuts. Would you add Walmart to your portfolio as a hedge? No. I don't see how buying a company that just ended up showing off worse than expected earnings is a hedge. I would say, what are you doing to hedge your Walmart position? Maybe you should buy Amazon. No, I'm not buying Walmart to hedge. I'm not sophisticated enough as an investor. You know, I was talking with Evan. He's like, dude, I really appreciate your commentary on the market. I wouldn't consider you a good investor, but you know, you make it easy to absorb the information stuff. And I was like, I'll take that. Evan, I'm first in the draft. Okay, give me that. In terms of the tools that I have access to and actually utilize in terms of hedging my portfolio and, you know, going extremely bullish and taking on leverage at the right times, I honestly keep it extremely bare bones. And with that also allows me to not have to hedge too much. I'm super, super comfortable to take on, you know, times where my portfolio is down. 2022 was abysmal for my portfolio. I just got absolutely crushed by the S&P 500. And there were ways to potentially, you know, hedge that and then end up going full port into bullish stocks afterwards. But that's if I knew that there was not going to be potential cracks in 2021 or 2023 and 2024, and that those were going to be extremely bullish. If I was hedging the entire time, my portfolio would actually probably be much lower than where it is today, just because of the cost of trying to ensure my downside. So I don't know. Obviously, if you're as concentrated as me in a few positions, like I've got like 18 positions or so, but I mean, the top 5 make up for like 75%. That, you know, drawdowns in those stocks can be extremely tough to stomach. But if there's one thing that I actually think I'm like, I'm way better than the average at doing, is just remaining extremely calm and knowing what I own. I can handle downside in my portfolio because like I just don't. I've got an iron stomach for this, And that's why I really do think that, like, you know, long term, I want to continue to invest. Is I just think I've got the stomach for it. I can handle that stuff, and maybe that changes as I get a little bit older. You know, the types of companies that I used to buy versus the types of companies that I buy today, much bigger in scale, but not because I actually think that they're safer positions or I'm trying to reduce risk, as much as it is that I just think that those companies are actually like it's just a different way of spotting true value. Like, do you want to buy an extremely small name that doesn't have a moat, that's growing at, you know, 50%? Or do you want to buy into Meta or Google or some of these businesses that have also completely sold off, do have extremely low valuations, are still growing at, you know, 20, 30, potentially 40% if Google Cloud continues to keep up the way that it is? Like, these companies are extremely agile. And while they are like essentially big cruise ships, they're able to turn very quickly, and they've got fortress balance sheets, or at least used to. So I'm going off on a tangent, but my focus on the way that I've invested has definitely shifted, but I think way to the upside. Like, I very much like buying really big quality names. And that's why I focus on things like buying the best in the industry. But yeah. Okay. Yeah, I got time on my side. Exactly. And if I don't, and I pass away or something like this, it's like, all right, well, I'm not going to care then either way. I either, you know, am planning for my retirement, or I'm out before it matters. Either way, you know, I gotta essentially invest for the long term. Why wouldn't you own Apple? I can't give you my actual my thoughts. It seems expensive. Okay. Are you as young as Amit? Amit is a week younger than me. We're a week apart. So yeah, same age. Steve, brother, the reason why I didn't say anything about Apple was I knew you were in chat. Okay, you're the reason why I just held my tongue. Love you, dude, and I hold on to your Apple shares dearly. Never to be sold until you change your mind, but until then, yeah. Millennials. You know what's funny? We're not actually. Me and Amit are actually considered Gen Z. Ugh. Isn't that gross? We're the first year of Gen Z, 1997. When you say okay, are you talking to yourself? Probably. I don't know. It's more like a filler word. Okay. Let's go ahead. I wanted to watch CNBC really quickly. Brian Armstrong was on earlier talking about some of the crypto changes and why they were in the White House. Let's have a listen to that, and then maybe we can talk a little bit more about some crypto positions like BMNR.
President Trump hosting a group of tech leaders and regulators at the White House yesterday, including our next guest. Joining us right now from Washington is Coinbase CEO Brian Armstrong. Brian, it's great to see you. You were standing next to the president yesterday. He talked about a lot of things. I'm curious if there's anything that you picked up that he talked about either with you or the group that we didn't see on TV.
Hey, Andrew, good to see you. And yeah, I mean, the big topic of conversation, both at the live session and in the Oval Office, was about clarity. The Clarity Act is coming up for a big vote with the full Senate floor on September 15th. And it represents a lot of bipartisan work. The president was keen to mention that. And thousands of hours from the Senate and the House have gone into getting this to be bipartisan legislation. It's also a good bill for law enforcement to go protect against illicit activity. It's a good bill for the banks. It gives them 13 new powers to go grow their business. And it's good for the crypto companies. And most importantly, it's good for the 50 million or so Americans who own crypto. And so that's the big opportunity we have now to cement all of these changes that everyone's worked on in this administration and make sure it's durable for many decades into the future.
If you were to handicap it at this point, you say it's it's a winning vote at this point?
I'm pretty optimistic it'll get over 60 votes, and I think both sides got 90% or so of what they want, which, in any deal I've been a part of, that you say yes to that deal. Like any good negotiation, there's a few last minute things people would want something a little bit more or less, but now it's really good that we have a deadline, September 15th, and I've got to give credit to Leader Thune, who scheduled that. There's a lot of competition for that floor time. There's a lot of competing interests. He would not have scheduled this on September 15th if he didn't think it would pass.
One of the other big issues, and I know you've been spending time and meeting with the SEC, as have been others, about the idea of tokenization and really the idea of what kind of exemptions the SEC could potentially put in place to encourage innovation, really in the absence of Congress passing any laws.
Yeah, well, you've got to give a lot of credit to Chair Atkins at the SEC and Chair Selig at the CFTC. They have made it very clear that they're going to continue to publish clear guidance and rules under their existing authority, regardless of what happens with the Clarity Act. So I think they're ready to move forward on that. They've actually, even just this week, the SEC put out new rules clarifying for the first time how crypto projects can go raise money that in the markets that are securities. That's something that we've been wanting for many years. I think the SEC is working on now an innovation exemption about how crypto securities could be traded in the U.S., which tokenized equities. Coinbase has been working hard on this, but we've so far only been able to do it offshore outside the U.S. In fact, we're launching our tokenized equities product next week out of Abu Dhabi for non-U.S. But in the U.S., we should be moving in this direction too. Same thing with single stock equity perps. So there's lots of work that these regulators are doing, and they're going to create clarity regardless of what happens with the Clarity Act itself.
So Bitcoin bounced yesterday. Your stock also bounced yesterday. I'm curious how much you think that was a bounce off of the back, effectively, of the meeting that you had, or it was really off of the bounce. I don't know if it's a bounce, but really in reaction to what Scott Bessent did yesterday.
Yeah, well, I think those are both good theories. I'd like to think that people are reading the tea leaves a little bit on a few things regarding the Bitcoin price. One is that we've been in a bear market on spot crypto trading for the last year or so. And if you look at the prior bear markets, they each lasted about, 370, 380 days. We're basically coming right up against that, where people, they're going to say, well, this one's about over, and it's time for the next bull run in crypto. They're also looking at this September 15th vote for the Clarity Act. And then traditionally, following the Bitcoin halving cycles, like October, November, December, these tend to be good months for Bitcoin. So I think there's a good chance we're on the cusp of the next bull market for spot trading in crypto. But what's important is that in this bear market, Coinbase has really diversified its revenue. We're actually only about 12% of our revenue now comes from Bitcoin spot trading. The other things that have been growing in this down market for spot trading are things like crypto derivatives, prediction markets, stablecoin payments, tokenization of real world assets like these stocks that I mentioned. And the big one that's on the horizon is what we call agentic finance, or AI-fi. That one is just getting started, but I think has potentially the biggest TAM, because there's going to be more AI agents than humans in not too distant future, and they're all going to have to, have an economy to get work done on our behalf.
I've got a maybe hard political question for you. This president has been very helpful to the crypto industry, and yet there have been all sorts of questions about the role of this president and the president's family as it relates to crypto. There was an op-ed in the New York Times recently that suggested that much of the conduct may be very well unconstitutional and illegal. And I'm curious whether you think that represents a cloud over the industry, whether you would prefer, all things being equal, that the family not be involved in crypto, or maybe you do.
Yeah, so this is a complex subject that I know lots of people in the Senate are debating. And, one thing I would say is that the president and the White House have put an ethics offer on the table that could go into the Clarity Act. It requires, I think, moving his funds into a blind trust, or there's different variations of it that are being negotiated back and forth. But that's pretty unprecedented. I don't think there's any actually bill prior to this where the president has voluntarily offered something like that to go into the bill. So there's a real offer on the table. There's some things I know the Democrats would like that's even a little stronger. My understanding is that they're going to keep talking and work out some kind of a deal there. But I think the most important thing to recognize is that, yes, the ethics question is big. I'll defer to Congress and the White House and the president on how to solve that. But there's a lot of good stuff in this bill about consumer protection and how to reshore all this back into America. And so I think everyone kind of realizes the ethics part would be nice to have perfect in everyone's book, but the 90% of it, we should not like leave the status quo and leave Americans unprotected as a morass of state legislation to operate in the U.S. That's just going to ensure this all goes offshore.
And then finally, Brian, you're in Washington today, but I imagine at some point you'll be flying back to Los Angeles, where I believe you live in California. And my question is whether, given all of the news and headlines about wealth taxes in California, we've been talking about Ro Khanna almost nonstop the past couple of days and some of the comments that he's made, whether you intend to stay there and what you think of all of this.
Yeah, so I think it's really unfortunate what's happening in California. You know, I think we all pay our taxes on gains and our income, and then you have what's yours. And it's pretty unprecedented for someone to say, well, we're actually going to come tax you again and potentially seize your assets. And there's all these questions about how do you even value that? Now, there's one other piece which, if let's say there was just a higher tax in whatever form it arrives in, and I felt like it was going toward really productive outcomes like, you know, educating people or healthcare. But the challenge is that we're now seeing there's a pretty high amount of fraud and waste and abuse in California. So I think it's a dangerous precedent to get into asset seizures. That's the kind of thing that third world countries do. It typically doesn't end well. Long way of saying I'm considering all options about relocating out of California before the end of the year. Nothing to announce yet on that front, but my hope is that cooler heads prevail in California.
Okay, I wanted to go through and talk about BMNR. Crypto is actually continuing its run, and the number one position in my not my portfolio, sorry, but in my watch list here, as you can see, is 8 Holdings. Then 2 steps down from that, Coinbase. Then MicroStrategy. Then a few down from that, Sharplink Gaming. Then Hyperliquid. Then BMNR. It's been a while, guys. It's definitely been a while since we've seen a little bit of a crypto run. I don't know if retail is ready for this. I know a lot of people do have positions in crypto. A lot of people ended up selling off, getting a little bit, you know, pointing fingers at people who were doing price predictions, which obviously is extremely silly. You know, that's sort of the hard part about being a prophet. And I think some people look to Tom Lee as being a prophet, and famously in like the Oppenheimer movie, you know, they say like, if you're going to be a prophet, you can't be wrong, not once. You know, Tom Lee was wrong, and he was wrong a few times in a row. And I think that this gave a lot of retail investors who had trusted his intuition an extremely bad feeling about him and the securities that he has sort of made a name with, like BMNR. I'm taking that out, and I try to do this as much as possible. Whenever I look at BMNR, we're going to look at this fundamentally. We're going to take a look at the actual company, its valuation, its potential for growth, its actual earnings, which it does have earnings these days. This company has changed a lot over the past few months. I am a shareholder, a bag holder. I'm down on this position quite a lot. So keep that in mind whenever we go through this name. But let's jump into a little bit of a BMNR stock review. Has it bottomed? Is there a potential for recovery in this name? First up, it all lies on the back of Ethereum. BMNR, at the heart of it, is an Ethereum treasury. I mean, not even at the heart of it. Its entirety is an Ethereum treasury. That's what they do. They hold Ethereum. If Ethereum ends up jumping from a price even this month of a low of 1,800 up to 2,350, that quick price appreciation is going to look very good for BMNR's books. And so, just like what we saw with the price action on Ethereum, BMNR is going to follow. And in fact, if you take a look at these two different price targets, Ethereum over the past month is up 23%, BMNR up around 26%. To put that into perspective, S&P 500 up about 2.3% in the same monthly period. Now, if you zoom out even further, obviously Ethereum's much more down over the last year, but if you're buying the bottom, that could be a really great way to potentially outperform, and crypto has been outperforming as of the last month. One of the most interesting things as well about this is that Ethereum is actually outperforming Bitcoin. Ethereum had seen a big step up, although Bitcoin's moving, Ethereum is moving up much more, and actually a new high on the Ethereum to Bitcoin ratio, the same way that Ethereum to USD is how you get its price. Well, if you compare that against Bitcoin, it's at the highest price that it's seen in over 3 months. Okay. It's not an all-time high. There's still a long way to go before we see that. But like right now, we're at 0.032. I actually think the long-term average is somewhere around 0.04. So there's still a ways away to go, but it's not constantly underperforming. We are seeing these moments of higher tick up. Now, the great thing about a Ethereum comeback is that BMNR has acquired and held more Ethereum each and every week since it's been public, right? Since the strategy has even started. As the months have progressed, they have slowly been able to accumulate roughly 5.8 million total Ethereum tokens. Now, this all depends on its ability to actually ramp up price, and they are doing this by diluting shareholders, and we'll get into all the mNAV and total share counts, but this is where we are today, okay? The speed at which they've been able to acquire new Ethereum ended up dropping off a cliff. We went from acquiring 100,000, 200,000 ETH, even further back than this, like last year, going all the way down to a few thousand per week, which is extremely, extremely low. This has actually brought the pace at which they were going to reach their 5% allocation of Ethereum way down. We essentially ran all the way to 4.7% of total Ethereum holdings and have slowly climbed over the last few months from 4.7 to 4.8. Now, I specifically asked Tom Lee to do this. This is actually a really healthy sign. See, there's a relationship that BMNR and treasury companies have with mNAV, okay? So you can sell off your stock to go and buy Ethereum, but those two things, how much your book value is worth and how much the market is willing to trade on that, and how much Ethereum's value is worth, should tell you whether or not that you should be buying Ethereum whenever your mNAV is high and then selling your stock to essentially gather more cash to then go out and like, if you're buying back your stock, then you're increasing your ownership of overall Ethereum. It's actually easier to buy Ethereum off your own books than go out to the market and buy it. So that's whenever I really started turning on BMNR and saw that this company was headed in the wrong direction, is because they continued to sell their shares to acquire more Ethereum, even whenever their mNAV was below 1. And you know, the extreme BMNR bulls didn't like that I had changed my tone on that. But Tom Lee, after I not saying he followed me, obviously they know this path 100%. Like they understand it. In no way did I suggest this or anything like that. But they did change their tone on it, and they've started to acquire more stock, which started just roughly about a month or so ago. And this is whenever their overall cash raises had started to head into negatives. This is essentially pointing to them doing buybacks rather than going out and doing dilution. Okay, really, really great sign there. There's some staking as well, so there's actually more money being raised than what's being shown here. But essentially, as of July 19th or roughly July 20th, they had started the buyback program, buying 5.5 million shares, then 6.1 million shares, then 4.5, 3 million, and then most recent week, August 17th, they bought another 1.7 million shares. Okay, total cumulative buybacks on BMNR, which has only been happening for the last 5 or 6 weeks, is now at over 20 million shares. It's actually a really good sign for BMNR. That's what they should have always done. Now, I thought initially, and what made me turn really sour on BMNR, is not the price of Ethereum. Like, they can't control that, but they can control what they have on their books, their cash and their Ethereum stake. Okay. Now, whenever that flipped and they were continuing to do raises and not buybacks, I thought that Tom Lee was trying to give himself a large payout, because if they pass 5%, Tom Lee gets a big payout. Regardless of stock performance, it's about hitting 5%. And the fact that they've slowed that down really goes to show that Tom Lee is taking the right steps to treat the health of BMNR over his own payout, which is a really good sign. Now, this Ethereum run-up could not have come at a better time. This is BMNR's cash over time. And really, whenever you see the sort of 1.2 billion, which is like up here, that's the highest cash they've ever had ever. And from that sort of April period all the way down, cash is just depleted consistently. And they've not been able to bring that up because they've been under 1 times mNAV. And now not only are they acquiring Ethereum, but they're also doing buybacks. Both are not able to generate them new cash. They do stake, and we'll talk about that, but they are down to only $78 million. Big, big difference than being at 1.2 billion, clearly. Now, the dilution is a big story on BMNR, but it's not something to be afraid of if they are acquiring the shares properly. This is part of the Treasury strategy. I've had no problems with this, but you can see from this point after sort of July and into August, as they've started that buyback program in the last 5 weeks, that shares over time have actually started to decrease, okay? Good sign that they're able to be agile and do both sides, which is to acquire Ethereum and do the buybacks. That's actually quite healthy. But let's talk about them actually making some money. BMNR staking over time has continuously increased. They're actually one of the largest, if not, I think they are the largest single validator in the world right now for Ethereum, which means that not only are they using their own Ethereum, but also using other companies or other individuals' Ethereum to then stake and take a reward from. This currently sits at 87% of their overall Ethereum that they have, which is 5.8 million total tokens that is being staked. Okay. What does that translate to in dollars? Roughly $343 million, getting close to about $1 million per day. Okay. And as Ethereum's price goes up, like if we pass, like honestly, we might even have passed it, just another little bit of gain, maybe 5% gain in Ethereum, we will pass 1 million because it's not based on like the staking actually gets paid out in Ethereum. So it depends on the price of Ethereum. So as Ethereum goes from $2,000 per token up to, let's say, $5,000 or $6,000, like let's say it's a triple just for easy math. This $330 million, $340 million of staking revenue will turn into over $1 billion because it'll triple because they don't get paid out in USD. They get paid out in Ethereum and that price changes. So this is a little bit of a cheat sheet that I've created just to give sort of a one overview of BMNR. Currently, their market cap sits at roughly $13 billion at an assumed, this is an estimated 601 million total shares. At a current price, which at the time that I took the screenshot was $21, BMNR is now at $21.51. So a little bit lower than where I took this screenshot. At 5,800 total, ETH holdings for BMNR at the price of Ethereum whenever I took this screenshot ends up bringing up their total mNAV. So this is looking at the amount of ETH that they actually have is roughly $13.6 billion worth of Ethereum, okay? Roughly $22.71 per share or an mNAV multiple of 0.95x, okay? Meaning that they have more Ethereum than they do in total market cap, which means that investors are treating BMNR as a bad capital allocator. They think that they are worse off holding Ethereum than what an individual owner could do holding Ethereum. On top of that, that's not the total worth of BMNR. They do other things, right? They have a stake in Beast Industries, Mr. Beast's company, roughly $180 million. They've got 8 co-holdings. They've got Bitcoin, okay? That roughly makes up another $268 million or 45 cents a share. And they also have $78 million in cash. So after you add all of that up, their mNAV, their cash position, everything, you're looking at a $14 billion position or a total mNAV at the bottom, as you can see, 0.93 times, which means people are essentially treating BMNR as a worse allocator to that money than if you were to have just bought Ethereum in Beast Industries and Bitcoin and all of these things. I think the interesting thing is, and why you should give a little bit of premium to BMNR, is their ability to get, staking your own Ethereum is not cheap. You need roughly 32 Ethereum in order to just create your own node. And then it's also expensive to set up as well. So they get a lot of benefits from being at scale, right? They have potential to make new revenue by being a staker for other industries as well, because they do have those nodes set up. Those types of things are not what many individual investors can just, instantly create. On top of that, Beast Industries is not a public company. It's not liquid. So being able to go in and acquire $180 million worth of Beast Industries is not an investment that just anyone can go in and get. That's connection, that's reputation, right? So those sort of things allow them to potentially get access to deals or new revenue streams that individual investors might not be able to get. That being said, their mNAV has been much, much worse than 0.93 times, okay? It's been way worse because they were diluting under a 1 times mNAV. That's going to hurt their mNAV even more, and it accelerates that worse multiple, because you're selling off stock to buy Ethereum, but your stock is made up of Ethereum, and that's worth more than what you're going out and acquiring. Okay, so that's actually really bad. The equity is worth more than the Ethereum that you're acquiring. Terrible strategy. That's why I really hated BMNR at the time. But they're no longer doing that. As you can see at the bottom, they are acquiring over 20 million shares. That should continue to accumulate. And if this all just stands on one thing, has nothing to do with Tom Lee, it has nothing to do with any of this stuff. I mean, hopefully they drop all their shenanigans about creating apps. And, I think sometimes their strategy of the company is so simple. Go out and acquire Ethereum, manage the book, and they have, 10, 11 employees. And so they get bored. They think that they need to create businesses out of this, right? That they need to create an app and help create a social media network and do way more things than what you actually need to do. And it's honestly just a waste of time and capital, right? When really you should be figuring out what price is Ethereum going to be tomorrow with everything that you have, every asset that you possibly have access to, and every relationship should just be wondering, when's a good time to acquire? When's a good time to buy back your stock? And that's the company. If they get back to that, which it seemingly they have been, and they've not been doing a lot of shenanigans recently, I think BMNR is on a path to a potential good, a return back to a very strong reputation. If Ethereum comes back, that's the only caveat here. If it doesn't, BMNR is going to be in the dumps once again. Now, going to a couple other updates on Ethereum here. We have seen some good appreciation in the underlying Ethereum, movement. One of them, in which has actually is severely helped by Robinhood Chain, which was built on Ethereum. There's been a massive boom in tokenized stocks. Okay, I wouldn't look too much towards the 23x in 1 year. I don't really care about that because the base started out so small. But there is billions of dollars on tokenized stocks, and it could just be the beginning. It's a very good sign here. On top of that, the amount of overall Ethereum supply on the exchanges right now is at a very, very low number. We're at roughly 6.5 million total ETH. That means that the amount of Ethereum at these current prices is being held by long-term investors. The Sharplinks of the world, the BMNRs, these people are not selling, or at least not looking to sell in mass. And so that brings a lot of stability and lockup to Ethereum's price. So the less overall Ethereum that you have trading, if you are looking for buyers and there's not as many sellers, the price, picks up very quickly. So that's why you see these types of pops like what we've seen recently, where, Ethereum can go from not being talked about one day to being up 20% the next. And that's just a really good sign for Ethereum, and the ability for it to have a run is that there's not a lot of supply and not a lot of remaining sellers looking to sell at these prices. So I'm not increasing my stake in BMNR. I'm not going all in on crypto or anything like this. And if I am going to buy crypto, it will be into strength, okay? I'm not looking to find the bottom. I'm looking to find a reasonable price where I have really good insight to believe that we're going to see another 6-month or, few year bull run. That's what I'm looking for. So no change in my position in BMNR today, even though, I might live to regret that if we end up seeing a big run or something like this. But overall, a good change of management strategy. I love to see those buybacks. I don't care as much as actually to see their Ethereum increase. I want to make sure that they get back to 1 times mNAV or even higher. Okay. That's the key to a treasury and what actually makes buying BMNR better than buying just straight Ethereum. If they can do that, and they've definitely made the right decisions to do that with, the increase in staking and staking other people's Ethereum, we're actually potentially looking at a real business here. But let me know what you guys think. And is it time to potentially look to more crypto investments as we get into, or potentially we get out of a crypto winter? That's a little bit of my BMNR update. Yeah, I mean, we absolutely, people are going to love Tom Lee. It's going to be stark to see how quick people change their mind on. Like, look to Vlad Tenev, right? During GameStop, this guy was a literal villain. Now people look at him as the savior of retail stock. Some people won't forget. There's obviously long-term Vlad Tenev haters, and there will be long-term Tom Lee haters. But those people sold. Those people sold at the bottom. Okay. I think you're right, Sherp. I doubt that we trade at severely high mNAVs ever again. I mean, there might be individual days or something like this where large investors use BMNR as a trading tool. I don't think we'll get there, but I don't think we have to. I think 1.1 times mNAV is perfectly comfortable. It's just not going to lead to a severe increase in overall outstanding Ethereum. The supply won't climb up as much. Okay. Tanner, does BMNR do data centers as well as crypto? No, they don't mine. Ethereum's different than Bitcoin. So they don't need, massive data centers or anything like this. The energy is not the bottleneck. Capital is the bottleneck. They have capital. So yeah. SoFi should consider acquiring BitGo. I'm sure that's sort of been in the topic for a while. I'm sure they've definitely considered it. That 8Co guy. Well, I wouldn't call him the 8Co guy. You're talking about Dan. I keep wanting to say Dan Dolev. It wasn't Dan Dolev. What's his name? Someone help me out. I've interviewed him. Come on. What the heck's his name? Funky shirt guy. Dan Ives. Dan Ives. Thank you. Okay. Tanner, any way to back into actual money value? Any way to back into actual money value on the Mr. Beast investment? Like Equity B or something? I'm not sure. I've not looked at it. Nor do I think I would be an investor. Okay. Anthropic is preparing IPO filing as soon as the end of August. Source was Bloomberg. I hope they go public as soon as possible. I can't wait to see those numbers. The only reason why they would look to even IPO right now or essentially accelerate their path to an IPO is because their numbers look good. I want to see that. I got to blow my nose again. Let's see here. If CNBC, I'm sure a lot of you guys have already seen the Scott Bessent conversations. I don't really want to buy or watch the whole thing. There was a conversation with Micron CEO. I guess Sanjay was on CNBC with Jim Cramer. Wow. Let's see this. I really want to see this. Okay.
Great to have you. First of all, Jim, thank you for coming here. Welcome to Boise, Micron headquarters, hub of memory innovation for America, and soon, as you can see in the background here, to be the hub of leading edge memory manufacturing.
Can't help but notice it, frankly. Now,
Amazing.
Now, my colleague David Faber mentioned when we were growing up, we heard about this great thing called Bell Labs. It was where all the innovation was occurring, and who knows what would come up, maybe even a picture phone. I am with someone right now who's starting Micron Research Labs. This is long horizon innovation. Tell me, Sanjay, why you're willing to spend $10 billion just on what amounts to basic research/hope.
And this is going to be critically important. I'm very excited about Micron Research Labs. We are convener and leader, bringing the ecosystem together to drive the breakthroughs for the next generation of AI era. This is critically important because memory is strategic infrastructure of AI. Memory absolutely requires higher performance. AI needs greater amount of memory, faster memory, lower power memory for AI to get smarter. Memory is the intelligence. So we're going to bring here, through Micron Research Labs, $10 billion investment from Micron, bringing together our customers, universities, startups, ecosystem partners, and of course, Micron researchers and scientists to drive research in materials, semiconductors, memory, compute, how to bring them together and to drive innovation for the next era.
I think for people at home, we've got to get them to understand. They memory, they say, oh, well, what is that? The cortex, where's that? No, when we think memory, what we're talking about is a specific type of chip that frankly had been the stepchild both to the CPU and to the GPU, CPU being the old days, Intel and AMD, GPU, of course, Jensen Huang. Why is memory now elevated? Why do we care so much about memory versus those other life forms that we always thought were superior?
You know, memory is no longer a component in a system. Memory is the strategic infrastructure for AI.
Commodity.
It's no longer a commodity, it is a high value. This is enabling value for our customers. Without memory, you cannot make AI smarter. You cannot make AI faster. You cannot scale up AI. You know, AI is advancing, a lot of context is getting generated. All of that context has to be stored, has to be processed through memory. So AI is driving a whole hierarchy of memory requirements from high bandwidth memory to DRAM to SSDs. And this is the exciting era for memory and critical need that all AI systems have.
Well, I would argue it's an exciting period for the United States because you never gave up. You always thought that we could be great. We have to compete against Japan. We have to compete against Korea. And by the way, we know that SK Hynix, Samsung are incredible. Why didn't your company give up on this country? Everybody else seemed to have moved overseas.
You know, Micron started right here in Boise nearly 50 years ago. You know, we are the innovators. We have 62,000 plus patents today. And of course, we have believed in the vision for memory. We say memory, our vision is, will accelerate intelligence to enrich life for all. You are absolutely correct that even in the deep downturn of 2023, Micron was investing in leading edge research. Today, you see the benefits. We have the best technology and product portfolio in the industry. We were making investments of $10 billion in our, in our R&D and CapEx to drive in
I want people to understand that. It's a $10 billion Micron Research Lab, unlike anything we've ever had, and it is going to be located here.
Research lab will be located here. It will have satellite campuses around the globe where Micron has R&D operations as well. And absolutely, we are going to be having groundbreaking for that next year. And Micron Research Lab is really going to be driving America's leadership in semiconductor and memory technology.
I believe it. I believe it. That's why we are here. And Sanjay Mehrotra, thank you so much. Back to you, Carl.
Someone said Jensen would roll over that dude. Do some research on Sanjay. This dude is a legend. I mean, practically the only reason why the United States even has a stance in memory is single-handedly because of this man. He is a godsend. So don't be talking crap about my man Jensen or Sanjay. Not that Jensen's not great too. I mean, yeah. Yeah, I'm pretty sure he founded SanDisk, or he was the I gotta remember, it was the I remember the whole story. He was definitely a part of Western Digital. He was a part of SanDisk. He was a part of Micron. I think he founded SanDisk. They hired him on as CEO for Micron. Yeah. He's yeah, that's my man's. Nothing wrong with a little glaze, yeah. He co-founded SanDisk in 1988. Well, there you go. So I don't know who saw the stream yesterday with myself, Amit, Neil, and Jose. We have to figure out a name for the stream. People have talked about marketeers, like musketeers. I like forecast. That's my favorite. But you guys got to let me know which name is your favorite. Foreskins, yeah, I did. They didn't like it. I mean, tough crowd, dude. I was throwing out bangers all night. They didn't laugh even a little bit. Yeah, spell forecast because there's 4 of us. We're the cast of the show. But it's, you know, we should just call ourselves the Beatles. Yeah. Let's see. The market breakers. Circuit breakers. I don't know. Fundamentals podcast. All right. Well, we'll come up with something. I don't know. Okay. I did reach out to someone to come on the stream. They said they need 15 minutes. So what we're going to do is take a look at this. So this has been passed around. I'm sure you guys have already seen this report. I've just not given my thoughts on it just yet. There was a combined tracker for both OpenAI and Anthropic, and you can just see, look at the scale and growth of Anthropic. It's wild. Like back whenever OpenAI was doing, you know, $12 billion of month-end ARR, you know, Anthropic was doing 5. Or even before that, they were doing 1 whenever OpenAI was doing 6 billion. Now they're doing 74 and OpenAI is doing 48. Some people think this is what the chart for Nebius versus CRWV is going to look like. You know, one is small but growing quickly, and if they can keep up those growth rates, might look significant. Now, at the top, however, let's just go back. You can see here the total combined numbers, and each month this has been going up drastically. So we went from essentially back in December of 2025, $30 billion. Let me actually make this a little bit bigger for you guys. In the month of December, we went from a combined $30 billion of monthly ARR to $37 billion to $44 billion. So this is taking 1 month and then timesing it by 12. So they're not adding 7 billion. They've, you know, added less than $1 billion month over month, and then you times that by 12. Then 44 billion, 57, 66 billion, 78 billion, 89 billion. Then in July, 105, and then this month is estimated to be $123 billion, where we are actually adding billions because it's up more than 12 billion month over month. So one of the craziest things about this growth rate is how it is the last month times 12. So those types of people talked about how Uber came in and spent too much and then, cut back on their budget. And this was sort of Ed Zitron's stance that he sat on for a really long time. Well, that should end up proving if companies, there was a company that had reportedly spent $500 million in a single month and then, I guess potentially pulled back from that. Maybe that was in March of 2026. This one seemed to be quite an outlier in terms of its overall growth. But you're not seeing spikes in their ARR, okay? Those actually have remained consistently growing higher. So maybe every single month a new company is blowing out their budget. Maybe that's true. But the likelihood is that companies are just spending more, okay? And this is two businesses. This is not, inclusive of the overall spend on, how do you say it? Open source, right? Now, another really interesting part about this growth is the direction. It's hard to tell how fast it's growing this way, but that's why we have another potential chart that they also added in, which was growth rate. And the growth rate has actually been accelerating, or at least expected to accelerate in August. July, a little bit of a, losing steam over the last couple of months. I say losing steam, growing at 518%. And that is off of a quarter that grew at 309%. So a really big step up on July. August is actually off of a worse month from July. So 304 to 457. That would actually point to an increase in the growth rate as well as a worse potential comp. But those comps are 300%. The combined 2-year growth rates are in the 860 plus percent. It's wild. So if these types of growth rates continue, you need a lot more compute, you need a lot more chips, you need a lot more networking revenue. Is this bullish enough? Do we need to see more than this? Are we going to see more than this? We're at accelerated growth rates on comps that are also accelerated. You're putting up potentially 559% off of 304%, which is higher than the months prior. Is this maybe the slowdown is not actually slowing down? Maybe we're actually accelerating into it. Maybe Grokbot and ChatGPT Astra and Fable 5.1 and these types of new models are actually going to lead to an increase even faster in overall spend. Not spend in response to no growth and no margin growth, in response to companies like even Walmart just showed off that their AI agents led to a 40% higher average cart value because customers were able to find products that they did want and didn't even know that Walmart potentially sold them. So once those agents had essentially addressed those customer concerns and saying, oh, by the way, it looks like you're potentially going camping. Do you know that we also sell, I don't know, some products for the grill or these other things or packaged Ziploc bags, whatever. And then people go, wow, I am actually, I am going camping and I would like to spend a little bit extra. So Walmart's perfectly happy spending, the money that they're spending on their tokens because it's leading to higher customer returns. Do you think that's any different to companies like Amazon.com, to Shopify, to all of the small businesses that are using Sidekick, that are potentially setting up their stores much faster, getting to convert on potentially more products or an increase to a higher subscription rate at Shopify? What is the thing that's allowing them to spend more, to get more sales that they feel very happy with, so they're happy spending on artificial intelligence? Right? Because at the end of the day, that's what you need. It's not spending for the sake of spending. We're not all just using artificial intelligence to give it a try. We want to see real productivity. Walmart ended up just showing that productivity is coming through, and it was one of the more exciting numbers in their quarter. While they did miss and they talked about weaker consumers in different areas, it had nothing to do with artificial intelligence, and that was one of the highlights of their overall quarter. So interested to hear your thoughts on those. Let's see here. I'm looking through some of your guys' names here for the for the podcast. Amidst short friends. Okay. Did I hear correctly that Indeed is acquiring Glassdoor? I'm going to look that up. I'm pretty sure I read something about this the other day. Indeed acquired Glassdoor, legally merged into Indeed on July 1st. Wow, this happened a while ago. That's crazy. That's a juggernaut of a business now. Call it the shift forecast, but don't ever talk about shift 4. Okay. On top of that, Goldman Sachs, by the way, sees 139 gigawatts worth of potential new power generation to serve data center demand through 2030. This comes through a myriad of different ways, solar, wind, but an overall big step up going into 2030. I think the thing is ultimately, return. What's the amount of money that you're going to make on this build out? And maybe potentially we've not been able to scale as fast as China in some of these areas. Maybe just in part that there's not a lot of money to be made previously. There wasn't as large of an energy demand. Now, in the face of artificial intelligence, you have customers probably ready to pay extreme rates. And so this could lead new entrepreneurs, new startups, a complete flurry of power generation needs that actually does allow the United States to increase their output, whether that's solar or nuclear or what have you, which there's been, large IPOs and large investments into names like Oklo and, Next Era and all of these other plays that people have been getting really excited about, whether that's LNG or nuclear or what have you. So we will see. I don't have too many energy names right now that I have my eyes on. Still playing a lot of the actual semiconductor names, but it might be the next part to really look at is the energy space. That could be one of the biggest bottlenecks. And maybe one that seems a little bit more insulated. I mean, even if artificial intelligence ends up slowing down or we hit sort of an equilibrium, does that mean that energy is not going to be used for other things? Is energy not the ultimate currency? Is it not going to be used for who knows what form of productivity, whether that's some big drone boom or EV boom or robotics or whatever the next big thing might be? Maybe, maybe GEV is the way to play it as sort of like a nice, new, innovative, but very sizable name. GEV is 20% off the top. Energy drinks Celsius. That I've got an energy play, Celsius. I mean, that is funny. Wasn't there a report on Bloom Energy that some of their systems were failing? Didn't I just recently read this? I don't think I saved the story, but I think there were some reports talking about some of the systems were acting up. I'm not trying to slander the name. Maybe it was for a different system, but I'm pretty sure there were some reports and some turbines that were not doing so well for some of the data center projects. I think specifically for SpaceX data centers, some of the Colossus ones. Was that true? Google, by the way, now just indicated that they are now at 1.4 million monthly rides just in California. You like that? That's their new, I don't even know how to say it. OG minivan from Zeekr. And yeah, they're really accelerating their overall amount of vehicles. I've never been in they wouldn't even let me get in it, by the way. They just said, hey, you have to look from the outside. But yeah, I was like, guys, you don't understand. I'm here to take content. I really tried to, like Big Boss, the Waymo guys. I was like, does this look like general admission? Okay, let me sit in the thing. They were like, step out of here. You're short. I'm not, guys. I'm not 5'7". Okay, look at my head. I'm not even remotely standing straight up. I'm leaning. My neck. I'm turned. Okay, the picture's taken from under the car. I'm taller than the vehicle. I'm not even remotely 5'7". That is so wild. You guys are making that out to be a tape measure. I told you guys to bring a tape measure to the meetup. No one did. You think everyone that came to the meetup was just short? I was taller than everyone. It's crazy. It's 5'10" for sure. No. I'm 5'11". I'm not even trying to give myself the extra credit. I'm not saying 6 foot. I'm not saying anything ridiculous. Guys, I need this. I need this. Please. I have nothing else. It's just my stock portfolio and my 5'11" tag. Please don't put me down where Amit says he is. I am not Amit's height. I probably have photos with Amit. Kelly's way too nice in the chat. Thank you. I'm not 6 foot, but Drago says 6'6" here, shorty. Well, you're not invited to my events. You're not getting in. You buy a ticket, you can get refunded. Okay. Who's better at basketball, you or Amit? I mean, probably Amit. I think he plays a little bit of basketball. I don't play any basketball. Didn't know Tanner was such a height elitist. More you know. Bro, I'm 4'11". Can I join? You're more than welcome. In fact, your ticket's paid for. I'll even fly you out. As long as we can take a photo together and I can height mog the audience, I'll cover your bills. Dinner's on me. Okay. Why do you think I hired Marshall? Marshall's not the tallest dude in the world. His application was completely off from what I was looking for. But then I was like, that height, I mean, company photo is going to make me look massive. I kid. This is a comedy show. It's comedy. Just a fun little show. Let's go ahead and listen about Walmart's earnings, and then we will send the stream invite to our very special guest that will be joining. Yeah, let's have a look.
Welcome back. Top of the hour. We have the second quarter earnings out from Walmart, and they came in at 81 cents a share, which includes a benefit from tariff refunds. Revenue was above forecasts, and Walmart also raised its outlook for fiscal 27, which ends in January. Same-store sales for the U.S. came in below estimates, with the retailer citing headwinds in the health and wellness category. Andrew, that is a GLP-1 reference, I believe.
Yes.
Don't miss a First on CNBC interview with Walmart's CFO on Squawk on the Street, 10 a.m. Eastern time, and the shares are moving lower by about 2%. Going into the quarter, I can say this with confidence. The analysts were warning that because of a little bit of a repayment issue around GLP-1s, there could be some pressure on their U.S. comps. I think they said if you add that back in, add maybe a point for that headwind. Nevertheless, obviously, everyone following the stock knows that already, and the shares are now moving down about 4%. So even with that cautionary baked in, you could call it a little bit of a disappointment. Treasury.
I had no idea that I clicked to hear about Walmart's earnings, and that was like a 40-second clip. I was excited to listen to a little bit more of a deeper dive into their numbers. Let's go ahead and actually read through some of those numbers. Also, Wix, by the way, announced today that they just hit $200 million in ARR for Base 44. It was like 4 or 5 months ago that they ended up announcing that they hit 100 million. Company is growing at blitz scale right now, and the stock is seeing some appreciation overall. We're not in the $40 ranges. We're actually up to 80 now. Pretty wild. We've more than doubled from the bottom. But, you know, tried to get Steve to listen. He now is choosing to not listen to me about bending spoons, which I've not purchased that one either yet. So we'll see if that one ends up doubling before I buy. Okay. Walmart, though. Walmart, I want to see some more about their earnings really quick. Yeah, light on the guide is really what it looks like here. U.S. comp sales, not good. Signaling a potential weak consumer. Our business model is only getting stronger and more durable, and we're pleased to raise our guidance, is what they said, but it was not as good of a guide as what Wall Street wanted to see. Okay, where's Walmart sitting right now? Down 9.5%. Is that U.S. comp sales? Yeah, Walmart U.S. grew 3.5%. Walmart International grew 12.8%. And Sam's Club somehow is... I didn't realize Sam's Club is still bringing in just tons of money. $25.7 billion this quarter alone. I did not realize Sam's Club was so big. Tanner's dense takeaway 2 inches. Yeah, if you were to put the measuring, like put a measuring stick this way, I'm 5'11". If you put it this way, it sinks. So I'm I'm 5'9". That's funny. Consumer-facing retail barometer is taking a hit. Well, I mean, there's been a lot of companies that have said that the consumer is really strong. You know, Chime came out and said the consumer was strong. They deal with almost the exact same customer. I don't know how to feel about that. Same timeline, same everything. One says consumer's really strong. One says consumer's weak. It's really been a mixed bag across financials and some of the e-commerce plays, how they've been feeling about consumer recently. Klarna said that the consumer was weak. Walmart said the consumer is weak. Chime, SoFi, pretty sure Wells Fargo also made comments saying that the consumer is strong. More on the credit side, I guess. Okay. The weak companies blame it on consumer. Yeah, I mean there is weak consumer from time to time, of course. But you do have to be cautious that they don't have to prove it. These aren't audited claims about weak consumer. They could just say those to blame certain areas of sales. They don't have to prove it. You know? So that is a little bit a little bit cautious. Davy Jones said, SoFi or Chime was the winner in that recent Tanner video. I still haven't watched it. Go watch it. Go watch it. Is Jason or Steve taller? I have no clue. I think they've taken a photo together. I don't think I've ever met Jason in person, or I've met him once. I don't think I've ever met him. God, that would suck if I have, eh? don't tell him. If we have met, let's scrub this from the internet. Okay. Chris Patel looks tall. You guys think all the tall people are short and all the short people are tall? I swear. Do you know what's crazy? For the long time viewers of this stream, if you remember Riley, I always remember Riley. I thought he was such a short dude. And I met him in person. He's like 6'4". Tevis is like 6'1". Steve, Amit, Chris. I mean, they're all the same height. But yeah, I don't even know who else is like. It's crazy though, because you're only seeing through camera, right? Vishal, if you guys know Stock Talk Weekly, I think he's like 6'3". Matt's tall. Matt's a tall guy. Matt's probably 6 foot, 6'1". SMP, while we're having fun talking about who's the tallest streamer, continuing to sell off, find new lows in the markets. I'm 6'3". I love it up here. Okay. NASDAQ down 1% now. Oh, gosh. My guest told me 15 minutes. He's now, it's now been 30 minutes. So be sure to really bash him whenever he gets in. Dude, you have a weird fixation on height. Well, that's just something fun. Yeah, Roy and I are the same height. We're just talking, you know? Sorry, some of you guys are weird. Wait until you get old and start shrinking. I'm down over an inch from my all-time height. That's pretty wild. From Big Lammy. It is not Jose. It's someone that you wouldn't imagine is late to things. Do a 50K poll on what stock they would buy right now. Look who it finally is. Later than ever.
I mean,
turn that fan off. You immediately enter like a wind turbine just joined the stream.
No, it's hot.
It's so loud.
It is hot.
Ladies and gentlemen, please welcome the great and powerful Stephen Fiorello.
What's going on, Tanner?
Not much, man. I'm big chillin', talking about Nebius, crypto, BMNR again.
Okay.
Pretty wild to see those stocks get a little appreciation today.
Well, we got to get through September 15th.
Yeah. Yeah.
Real.
But what's that?
Talking to myself.
How have you been today? You enjoying the sell-off? You buying anything?
Sell-offs don't bother me.
Yeah. You're saying they don't bother the rich.
I'm saying they don't bother me.
Okay.
They bother pretty much everybody else.
You're richer than everyone else.
No, I wouldn't say that. I'm just saying that I have an iron stomach.
Got you. Got you. What are you most interested in right now?
Well, I would like CoreWeave to go back to like 85.
To buy more.
Yeah.
Yeah.
I'm being a little cheap right now. If it was under 90, I have an odd amount of shares. So I have to buy more. I don't like not having, unless it's a dividend stock where I can't control it. I don't like not seeing zeros.
Yeah. I get that.
It's just mental math. It makes it easier.
And for the option selling.
And for the option selling.
Yeah.
Yeah.
I never cared about it until then. Now I round everything.
Yeah.
But we didn't really get to talk too much on our last podcast. We were graced by the presence of Chris Patel, and then, that brought us down some bearish rabbit holes that I just prefer to ignore during our Tuesday nights.
Yeah, I mean, I think you saw what I posted. Ed Zitron never responded.
Yeah.
But, everybody's getting into a tissy fit and for no reason. The reality is that OpenAI is expected to grow anywhere from 50 to 80% quarter over quarter in Q3. They have $73 billion in cash. They just raised at a much larger round, and they're going to go public and tap the equity market. The idea that they are in trouble, or as Ed Zitron wants to say, washed, or as the Bears would say that we have a problem, they never said they were going to turn a profit until the 2030s. They have always said that they are going to be a massive capital allocator and do not expect to see $1 of profit for years and years.
Yeah.
They have more than enough cash on the balance sheet. They had a lot of one-time charges in Q2. And guess what? 18% quarter over quarter growth rate before GPT 5.6. And when you look at what Sarah Fryer said, I don't see any problems. I think the Bears are stupid. That's my own personal opinion. I'll say it again. The Bears are stupid.
I don't think they're stupid. They're being cautious for sure.
Well,
I think the
that's
people
fine.
who are ignoring the signs are doing themselves a disservice. But that gives you abilities to get CoreWeave at 85.
Look, if you want to make a bear case around valuation, you want to make a bear case that, look, maybe these aren't the greatest ideas because they're not going to be profitable for X amount of time and there's an opportunity cost, I'll buy that story and I'll support that story. But don't make a bear case that OpenAI is going to go force majeure and can't pay its bills. Don't make a bear case that isn't supported by data.
Really quick, what's on your mic right now?
Something to block the wind from the AC.
It doesn't work. You got to take it off. It's just muffling your voice.
What do you mean it doesn't work?
It doesn't work. I hear your AC. You got to take it off. It doesn't block sound. It's blocking if wind is directly hitting the mic. That's what a windshield would do.
So this thing isn't doing anything. So I should return to Amazon.
Sound way better like that. Go back to the way you just had it. It sounded way better.
Like that?
Way better.
Okay.
Now say a sentence. Is everyone agreeing with me there? Better. Okay.
Okay, it's better. Good. I'll make sure that I keep the mic like this from now on.
There you go.
There we go.
But yeah, that's not gonna do you anything. But this thing, like the little pop filter for what you need is gonna do, or this is not a pop filter, but this is gonna do what you need for an indoor situation. You're not outdoor where the wind's blowing.
Gotcha.
If the wind does blow, does your hair move even a little bit?
Yeah, of
Or
course.
are you just like stuck there like a painting?
No, it moves all over the place.
I'm just trying to figure out what products you got in your hair.
It's called New York water.
All right.
I mean, Tanner, look at this. There's nothing in my freaking hair. I wouldn't be able to do that if there was gel in it.
Yeah. Now touch your phone screen. Let me see what just left behind. All right. Nebius just announced that they're raising $5 billion.
Yep.
They're doing that from
Convertible notes, I'm aware.
Convertible notes. I'm telling it to the audience. I know you know this. But with that, are you getting a little shook? Are they raising too much debt? What do you think about Nebius here versus just purely CoreWeave?
No, I mean, look. If we want to go down the rabbit hole, we can. But I am not getting worried about Nebius at all. I'm not getting worried about CoreWeave because I believe that there is so much potential to be unlocked. We need so much more compute. Look, I don't see the problem with Nebius raising debt. And here's why. The people that have a problem with this, they clearly didn't read through the Q2 report, okay? If I remember correctly, they reported that they did 582 or 592 million in revenue. It was over 450% year-over-year growth.
Mm-hmm.
I think it was close to 50% quarter-over-quarter growth. You had
Crazy.
an annualized revenue run rate of close to $3 billion. They produced over 225 million in adjusted EBITDA at, what was it, a 41% margin?
I don't remember off the top of my head, but that sounds right. Like around 40%.
They generated 2.3 billion in operating cash flow, and they finished June with 8 billion in cash.
Do you think adjusted EBITDA is the correct metric for a company like Nebius?
Okay. Well, regardless if we want to look at adjusted EBITDA or whatever.
It's just because you're stripping out the depreciation, which is like their main cost.
Sure. The reason they're doing this is because convertible notes are usually the cheapest capital a growth company can access. And I think that the March coupons were under 1.5% and or just around 2.5%. And there was like a close to 60% conversion premium. And they're probably negotiating exchanges in the future. And the way that works, I don't have a problem with it. So what, you don't want a company to raise capital to build data centers to sell compute when that's their business model in the greatest build out we've ever seen? That doesn't make sense to me.
Yeah. Yeah, no, it's wild. Like it's like almost like you want a company to raise a bunch of capital and go full blitz into growth mode, but the second they go public, people want them to do purely buybacks and stuff, even though Nebius might as well be a startup. Like they're that young. They've gotten to their size pretty quickly, but you're looking like 2 years ago, 3 years ago, they had like $14 million in revenue. You know, and a lot of that is because they raised capital.
And let's not forget, they did an equity raise in 2024 where they sold shares around $20. In Q2, I think they did close to 13 million shares at around $225 a share and raised close to $3 billion. What, you don't want them selling stock in more than 10x the last equity round?
It's a pretty good sign.
So
in privates, that would make a lot of sense, right?
It would make people would say that OpenAI had the best leadership if that was the metrics for them.
Yeah.
So it just comes down to people hate AI. People want to get jumpy. People want to be shook little babies. I got news for everybody. Don't invest. Please, don't invest. Go invest in bonds. Like, if you're going to be shook and worried about every little detail, don't invest. Go buy the S&P. I have a bunch of the S&P. Go buy the S&P. There's nothing wrong with that. The reality is there's not a single data point that shows that the AI revolution is slowing down. There's not a single data point that shows that these companies aren't monetizing these assets that are being stood up. And there's not a single data point that the contracts Nebius and CRWV are signing will go force majeure because their tenants won't be able to pay the bills. So until we get data that actually proves something, instead of the bears making up bullshit excuses and moving the goalposts, remember what the first real bear case was, that there was no AI use case. Really think about that. That was the first bear case.
Yeah.
So I don't want to hear shit from the bears.
Family friendly show.
Well, you shouldn't have brought me on that.
No.
I said you shouldn't have brought me on. I didn't curse. Don't get. I saw your arm reaching. Don't reach.
Well, I thought that you were going to prove a point by swearing.
I keep you on your toes.
Did you see the outfit I wore for you yesterday? That sounded terrible. Did you see the outfit
what
I
are
wore
you talking about?
to Amit's show?
No, I don't even know what you're talking about.
I did it for you.
Did you? You did what?
I'll show you. You got to be on X more.
Yeah, I rarely go on X unless it's to screw it Zitron.
Sorry.
Are you wearing pajamas and a nightcap?
Yeah.
It's pretty heroic.
Isn't that good?
I will say that's pretty heroic.
By you?
Yeah, I just finished streaming, got into my regular nightly outfit.
You don't wear, that's not your regular nightly outfit. Don't start with that.
It's my regular routine.
Do not tell people that you do that normally. There's no way you wear that normally.
Every night. The second I end stream, next 5 minutes, I end up in that outfit. And then,
No, you don't. Don't lie.
I get my candle and my tea and my little booties, and I scoop myself off to bed.
Oh my God. You are like an 80-year-old man.
Yeah. So
next thing you're going to do, you're going to tell me you're investing in Coca-Cola.
No. I'm never.
See, that's why I can't believe that you're wearing pajamas, because you invest like you're 10, and well, you don't own a single stock that isn't a high growth stock, so you're not investing like an old man.
I probably own something that's not high growth.
Oh, this should be good.
I've got Mag 7 names.
Okay.
Yeah,
all right. Sure. I stand corrected.
I own the biggest company in the world. Like, how is that? That's not old.
Oh, no, sure. 85% year-over-year growth is not a growth name. Okay.
Are you going to get used to saying 100% once we see next quarter?
Oh, you think they're going to do 100?
Dude, let's do another bet.
Oh, boy.
Above or below, under or over on 100% growth?
Under.
Okay.
But I think it's going to be like 96, 97. I just don't think they come out triple digit.
Okay.
I think it's going to be very high.
And what would you?
Nothing.
What's the new bet?
Nothing, because you know what? I think that I wouldn't put it past Black Leather Jacket Man.
I mean, that's no fun, dude. People want to see bets being placed live in real time.
Well, we have a live in real time bet.
Yeah, I know, but come on. You said under. I'm saying over. Let's put some money down.
No.
I want your money so bad.
I know you do.
And you're being shook.
I mean, I'm not that confident on this.
All right. That's fine.
It's not a good bet for me.
Okay, so what what was I going to say? Aside from NVIDIA earnings next week, you think that they're going to do terribly, 97% growth. You're being quite bearish. What do you think the stock reaction is going to be to that?
I think it breaks out.
Yeah.
But I don't think it breaks out to 300. I think it breaks out to 230, 240.
230, 240 on earnings, or like day after, you mean?
That week. They report on Wednesday that week.
Wow.
Yeah.
Yeah. That's a big call it. I mean, hopefully I see something big, but I think most of Wall Street is already expecting a large run up in earnings. So like, maybe this sounds silly, but why do we need to see the numbers if, you know, the estimates are already so certain?
Well, they're certain in our eyes.
Yeah. But certain in Wall Street's eyes too. They're pretty bullish. There was a report that came out, I think it was Morgan Stanley the other time, said they would grow at like 107%. So maybe that's pretty nice.
Yeah, I mean, I think they're going to do very well. And I think the guidance is going to be better than what people expect.
Yeah. Aside from that, did we talk crypto already? What do you think about crypto?
Yeah, we did. We got to wait until September 15th.
Okay. No, not touching it till then.
I mean, I own it.
Yeah.
I'm not going to get excited until we actually get a bill passed.
Understood.
We all know how that can go. Now, I don't think that they're bringing it to the Senate floor if they don't believe it's going to get at least 60 votes, but I've seen stranger things happen.
Yeah. Now, in the actual draft that we did, you picked a lot of these names that I think are not old school, but just like, you know, less in vogue than potentially where we were before. And these are actually some of your greenest names: Netflix, Uber, Salesforce. The SaaS apocalypse and some of those other names have seen nice recoveries. Are we going to continue to see uptakes in those names in people's portfolios?
I'm going to make a prediction.
Yeah.
Don't be surprised if you see Salesforce between 250 and 300.
When? You're not giving me a timeline.
End of 2026.
So 25, 35% upside?
It is so cheap for the profitability. If Benioff doesn't screw up the earnings call, that this stock, I mean, look, and this is the big conflict, because people don't look at investing the way that they should look at investing. And when you buy a stock, you are purchasing an equity share in a real company whose job it is to generate revenue and profitability. Now, there are all different metrics for all different things. Some are young companies, some are not. But the underlying aspects of what you're doing is the same thing. You're investing and you're paying the present value for all of the company's future cash flow. Mm-hmm. When you look at Salesforce, I mean, it's trading at around, well, what's the market cap right now? 160, 170 billion?
170 billion.
Okay. It's trading at about 12 times free cash flow. Cash flow is $14.5 billion. That's not ops cash. That's free cash flow. This company continues to buy back shares, grow the dividend, generate obscene amounts of profitability, and people are worried because they think it's being vibe coded away. We are well past that point. ServiceNow should be up a lot. Salesforce should be up a lot. Silver Lake potentially acquiring Workday put the nail in the coffin for all the idiots who actually believe that this was real. And I call them idiots because they don't know what they're talking about. No compliance officer. And it's easy for me to say that because I've actually worked in the space. I've dealt with the lawyers on both sides of the deals. I've dealt with our chief compliance officer a lot. No chief compliance officer or general counsel is going to allow an IT person to vibe code software to put your sensitive data in. It's not happening. The idea that this went viral over X and everybody actually believed it was so insane. I really am shocked at how insane it was. And we still haven't seen the real recovery yet in these companies.
Yeah, because I think that, we haven't seen the end of AI improvements. I don't think that it's about an IT guy that builds out these softwares. I think it's a matter of how much more can Microsoft do? Can Microsoft offer you a platform? Not, is the IT guy going to do it? But can they compete on price versus Salesforce and, be a little bit more specific to their needs?
Microsoft's already competing against SAP and Workday. They have Dynamics 365.
Yeah, but all I'm saying is, I don't mean Microsoft. What I'm saying is like a company with a real reputation that has really smart engineers and an unlimited token budget.
Right. Anybody can go into an adjacent vertical and try to compete. But once again, Salesforce and ServiceNow have unlimited token budgets also.
I know, but they have high fees.
High fees?
Yeah, like the cost for the software is high, and if the barrier to entry ends up getting lowered, would there be potential customers that might want to renegotiate their deals?
There could be customers that want to renegotiate. At the end of the day, it's not just about one person's opinion. It's about moving an organization off of a platform. It's about migrating all the data to another platform, the implementation phase, how much that costs, not just with capital, but with staff time, familiarity about utilizing the product. There's a lot of things that go into that decision-making tree, in addition to the thing that nobody talks about, which is when you make that type of a move, whoever makes that decision is now on the chopping block if something goes wrong.
Right.
There's a lot of things that go into it. It's not as cut and dry as what people make it out to be, because everybody in those positions are one bad decision from getting fired.
Or huge promotions. Save a large organization a few dozen $1 million per year, and guess what? You're going to see a percentage of that. Not a large percent, but
well, look, it comes down to how much of a difference there is and what companies are able to undercut. And maybe that happens. It's just not happening right now. And I think that that's the only bear case that makes sense.
Yeah, I mean, Anthropic is a huge user of Salesforce. I mean, that's one of the greatest signs right there that they're not going anywhere. The company that's here to replace them is a large customer. But I also know that and I'm just not ready to jump into any of these names because there's so many of these large changes in AI right now. It's very, very hard to predict the future. And I'm always cautious to buy into names that, might end up getting eaten away. Now, I don't think that that's Salesforce. I don't think that that's ServiceNow. But there will be software companies today that are alive that will no longer exist in the future.
100%. I think Adobe's one of them.
Maybe.
I just don't, and I could be wrong, but I think Adobe has the weakest moat out of these companies.
Yeah.
It's just when I think about what I'm doing with AI, why would I need Adobe for anything? You're not storing confidential data. You're not storing payroll data, bank account data, social securities. You're not storing any of that in there. You don't need compliance with Adobe. You need that. You need SOC 2 and SOC 3 reports with these other companies. You need companies that adhere to high tech and HIPAA standards for these other companies. You don't with Adobe. So I think Adobe is the one that could get replaced. And Adobe's numbers look the best if you're talking about pure value. So It's very hard for me to make that statement. But if you're going to talk about moats, I don't think Adobe has a moat that can be fortified against AI the way the others do.
What about the thing you need Adobe for to sign documents?
It's called, you can get Nitro. Nitro's undercut them already. There's a couple of companies that have undercut Adobe. And for the people that
I'm pretty sure Google just did it for free too. Yeah. You can do e-signatures for free on Google.
And for somebody who said, so Reddit has no moat, I don't know if that's meant for me or not. Reddit's got one of the largest moats. It's called community. You can't vibe code away community. Reddit and Meta have two gigantic moats.
Yeah, you can't vibe code away people showing up.
No.
I don't know, man. I'm you got to mute. It's crazy whenever you don't talk how loud it gets. I'll mute you. It's good. Yeah, like whenever I don't think all in artificial intelligence. I don't really think that's the way to for me to think about it. But understanding a company's quote unquote moat is very important. And I think the word moat is tossed around a little bit too much, but just survivability, sustainability. And in new technical breakthroughs, those are constantly being questioned. Think about quantum and what that, how people think about crypto there. And it's not like that should, if quantum can end up breaking through Bitcoin security and there's no way to make it quantum proof, which I mean, that's in question right now, but it doesn't re-rate it down 10%. It goes from, hey, this thing is valued at X trillions of dollars to, okay, this thing's completely useless and worth zero. And I think AI is going to have a similar feat with many software companies where there might be some customers, like with what Bending Spoons is seeing with Evernote and everything. Just because there's a better offering doesn't mean that 100% of customers switch. Maybe people really like Adobe. There might be a large swath of customers that know that there's an alternative, but just prefer to do what they know. But that doesn't mean that that's 100% of customers. But I'm curious your take on, is there other names aside from Adobe that you would be really cautious around right now?
I don't know. Adobe is the one that I really think has a very light moat.
Chris has been really on that one, though.
Yeah, and it's the one that him and I disagree about. We're 2 out of 3. We both align on Salesforce and ServiceNow. Adobe's the one that we don't align on. And I just think about it like this. If I can go to Gemini, create an image of us, and then go to Canva and get everything resized for my YouTube thumbnail, why do I need to touch Adobe for anything? And I know that that's very simplistic, but I just feel like, as you said, what's going to happen in the future with AI, eventually you're going to have these AI products that can do everything for video editing, et cetera, et cetera. So it's just very hard for me to see why people would need to sign up for Adobe Premiere with the AI tools.
This Marge is calling, says SpaceX is cheaper than Tesla, Steven, $100 to $300.
Trolling me again.
It's pretty wild.
I know. It's pretty wild.
It does happen. I mean, that's, I think I've seen some of their comments before, and I think he is trolling, but like, there are some people that are completely in different phases of their investment journey. And I remember we were talking about Mercado Libre, and I was talking about how cheap it was. And many of the comments were talking about how cheap this company is. And then some people, unironically, I believe, were coming on saying, how is this company cheap? It's $1,900 a share. It is weird whenever you're talking about stocks and not everyone has the same amount of information or knowledge about certain things. How to try to talk or educate around different areas of people's investment journey. And many people watching are way ahead of me, and they're just listening to me ramble on about stuff that I don't even know what the heck I'm talking about, and they're pulling their hair out.
Do you want to see my new project that I'm spending tokens on?
I saw it with you and Tevis.
No, I redid it. It's new. It's new.
It's new. Sure.
It's new.
Tell me what everyone's going to be spending their money and time doing.
Full-blown gambling system. Full-blown. I mean, I think I have like 8 APIs pulling into this. We got prediction markets in here. We got our bet slips. I have a learning module, and I'm getting ready for football season, baby. Getting ready. So I got a data lake set up with this, got all the player statistics in here, got historical data on defenses and everything. We're improving the algorithm round the clock.
The only thing I disagree with so strongly, and I think that you're crazy to think that the way that you're thinking, is that other people cannot make this.
Did I say that they can't?
Yes, you did. You
When?
said on Tevis's stream, he said that, you know, the sharps are going to be making these exact same things. You said, we'll see. We'll like you were going to somehow outperform them.
Oh, no. He said that I would get kicked off the platform if I won too much.
Yeah, but you know that's going to, you said that's your goal.
I said that's my goal. And then he said something about, can this really become a sharp? And I said, we'll see. I think it can with enough refinement and enough money thrown at it.
But do you think that arbitrage is not going to last long?
So I'm going a different route. I'm not going sportsbook off a sportsbook looking for an extra 2 points in a line that hasn't been moved yet.
No, I don't mean that. I'm talking about like a knowledge arbitrage. Like, do you think that people will have the tools that you're creating?
Everybody will.
Everyone will.
Everybody can do it right now. I mean, I'm not doing anything special. The only thing I'm doing special is I'm utilizing my time and I'm going down the rabbit hole and I keep refining this and I keep adding APIs and I'm actually building it out. Anybody could do it. The thing with this is if the Jets and the Giants play, okay, the outcome is going to be whatever the outcome is. But I think I can get this system to make the best possible prediction based on all the data because I'm collecting every data point. And now, does it end up winning in the season? I don't know. Maybe, maybe not. We're going to find out. Like the goal is to get it to the point where it has a really good success rate and then just try to make a big run at it.
Why don't you put this up against prediction markets or these sort of things? Try to get advantages there. You won't get kicked off.
I have a full Kalshi API on this for prediction markets.
And are you using it?
I'm building it in. It's all in here.
I remember you talking about you not spending over.
I don't like prediction markets, but I would consider it because I don't think Robinhood would ban me from using it. But yeah, I have the dual market contract system already built in, and I have a screener for the Kalshi match queue. It's currently updating and doing everything. But yes, we have a full Kalshi thing in here.
So you spend all this time and tokens on creating this software.
Yeah.
I remember you saying like you don't spend over $1,000 a month or something. How much of your overall cost is on APIs? Is that higher than your token budget?
Well, the APIs are part of the token budget because it's priced off of tokens. I'd say what I spend through APIs is probably 20 to 30% of the monthly spend.
No, I don't mean like Anthropic APIs. I'm talking like your data that lakes that you're sourcing from.
Yeah. For the finance platform, it is significantly more than this. You would be very surprised at how many free APIs there are. Because I'm not running a public site, so I don't need 5,000 calls per minute. Yeah. I just need to be able to sweep the data every day.
Got you.
Yeah. So I'm actually able to get away with the free tier for all the APIs for the betting thing.
Yeah. Yeah, that makes sense. Well, I love that you're spending and finding new use cases on with artificial intelligence. It's one of the things that's going to keep you super sharp is I think a lot of people have opinions on AI and they don't use it as much. You know, getting to see what the newest models, getting a feel for Opus 4.8 and Opus 5, and then choosing to use Fable 5 and getting those feeling like you're really going to get a sense for what other people could potentially come up with, and you know, other people's ideas that could be completely endless. You're looking at new video games accelerating their development on e-commerce sites, on people's ability to make real revenue here. Pretty exciting. And then on top of that, as they put out Fable 5.1, I'm sure you're going to be one of the first people to try it. You know, you'll either get very bearish or bullish on those new developments. Have you tried Grokbot?
No. I interviewed Farzad last night. It's coming out tonight. He walked me through it.
Yeah.
I'm going to spend the weekend playing with it. It looks insane.
Pretty crazy.
I
don't think you'll have to use Grokbot for too long, though. I think, you know, ChatGPT and Anthropic and all those companies are going to be working on very, very similar types of tools.
I'll tell you, I used Sol 5.6. I used Codex to build something. Let me tell you, Fable 5 is still leaps and bounds better.
Yeah, but it's way more expensive.
It is. Do I care if it's more expensive? It's leaps and bounds better.
Yeah, but no one, you're not even arguing against it. No one thinks that that's, no one said that.
It's crazy how good it is.
No one's even suggesting what you're suggesting. But, you know, whenever you go to the dealership, the interesting part about Tesla is like, okay, well, how much faster is it than a Lamborghini? How much faster is this cheaper car versus the most expensive car? Not that, you know, if you go and buy a Bugatti, that it's not fast, of course, but you're using a Bugatti. Like, it's the best, but it's the most expensive. So,
but is it really that expensive?
I mean, not for you're using it for your own internal use. I think whenever you're looking at Meta having, you know, tons of engineers that they're already paying $200,000, $400,000, $500,000 a year, for them to all have $100,000 token budgets on top of that, you know, it accelerates the expense. It's not replacing the engineers; it's on top of their engineers. So it's new expenses, and yeah, you want to try to keep those costs low if you can.
Yeah, I mean, it's not costing me a lot of money to do this. And keep in mind, everybody, I'm doing this for fun because this is what I enjoy doing. Like, I am utilizing AI to automate things in my life, and I happen to like sports betting. So I'm trying to build my own Sharp to make me a better sports bettor. I don't know if they're like, and here's where I think we're going to really see the use cases. There are so many people that don't even pay $20 a month for a subscription to these chatbots, and they're just using it on a superficial level.
It's wild.
If you really think about like what you're interested in and think about automation or making things better or doing something, and you just pay the $20 a month, it is going to change the way you look at AI. I truly believe that.
Yeah. I think so many people care so much about saving small amounts of money and don't think about the time that they're taking to try to fill in those $20 gaps.
Yeah.
Like, sometimes it's really good to just pay a premium. Like, AI is one of the best ones for that, for sure.
Yeah, and look, ChatGPT is probably better than Anthropic at an all-encompassing normal person utilizing it. When you think about co-work and you think about all the things that you can hook it up to do with your email and everything else.
Yeah.
For the normal person that just wants to save time, I think ChatGPT is the winner.
Well, let me ask you, Steve, you make your images for your thumbnails. Where do you make them?
Gemini.
And where do you do your coding?
What do you mean? My coding? Claude Code.
Yeah. And because it's Anthropic, is not that great at generative AI. But, or at least I should say,
Gemini makes the best images, in my opinion.
But I would look at ChatGPT for images.
I never even tried it.
So I would say ChatGPT, like what you just said, for everyone's average use, if you want a little bit of everything, they are the best. And we do all the images, coding, all of that stuff on ChatGPT, and I'd rather just manage one subscription with Marshall. Also because the teams that we create, Anthropic for some reason is being so stupid, they won't let you create a team of 2. They say, hey, if you're going to create like a Claude team, it's got to be 5 people.
I know, it's so stupid.
Like, you're forcing me to go to ChatGPT. I wanted to use Anthropic.
And don't get me wrong, 5.6 on high is really good. It's just for what I'm using, it's not as good.
Yeah. Yeah. And isn't it crazy that you're using a watered down version of what's available?
I cannot wait to get my hands on the next version.
Like Mythos Preview that came out, like, I mean, it probably didn't come out a year ago, but like, we're probably, it's probably over 6 months, 7 months old now, and we still don't have access to it. Oracle just posted this talking about how they are showing off the amount of bugs that they've been able to identify. This is Claude Mythos preview. This is smarter than Fable 5 because they have it for specifically cybersecurity purposes.
Yep.
And they're just seeing unbelievable breakthroughs. This is not cumulative results. This is constant. Every month they're finding higher and higher amount of vulnerabilities that we're just probably lying dormant for decades that they didn't even know about. Like, wild. And then what does Mythos 2 or Mythos 3 look like as we start to roll those out?
It's going to get...
And you want to bet on Salesforce.
Yeah. Well, Salesforce has a defendable moat for the time being. Now, can a company build something out? Yeah, but it's not just, Tanner, it's not just building out software. You now need a sales team. You now need to get in front of decision makers. There's a lot of things you have to do. You have to stand up a full company. Like it's not as easy to say, okay, I just created software, let me go sell it.
No, I'm
not as easy as that.
I completely get. I love how you cut yourself off. By the way, you're like, it's not Tanner. I didn't even say a word. Yeah, like I said, I'm not worried about the two kids in their garage. I'm worried about the Microsofts and the Googles and these sort of companies that might sell it as like an add-on feature to their overall suite of like,
absolutely,
you know, because then they do have the compliance stuff, and they will be able to.
And I would argue that you look at Palantir, a lot of people thought that Microsoft was going to be able to take Palantir out with Fabric, the combination of Fabric and Power BI. And yes, Fabric is gaining a lot of clients and a lot of people, a lot of organizations, but it's because it's as an additional feature in the Microsoft suite when you go Azure. Mm-hmm. And Palantir is still growing at a 93% year-over-year growth rate. So I'm not sure where this goes from which company is going to eat whose lunch. I think that there are really good reasons to utilize the Microsoft Fabric environment, but I also don't know that it does exactly what a company like Palantir does, the same way that if they decide to get into the CRM business, are they really going to be able to get customers to leave Salesforce? I don't know. Maybe they can. I'm not sure.
Yeah, or just stop future companies from, like, could it impact future growth rather than even take customers from them? They don't need to leave in order to impact Salesforce business. They just need to slow down in their growth.
100%. I mean, look at Dynamics. Dynamics didn't really impact, and they've gained clients, but it's not destroying Workday, SAP, or Oracle for ERP suites.
Yeah. Yeah, it's pretty interesting. It's funny whenever I think back like 5 years, well, maybe not 5 years ago, maybe like 3 years ago, 4 years, maybe it was 5 years ago. Holy crap, it's 2026. And Jensen Huang talked about how the human is going to be managing essentially a C-suite of direct reports of agents that are managing dozens or hundreds of agents underneath them. And there's going to be essentially entire factories of agents or organizations of agents that are doing all different types of tasks. We're just starting to see the first little bits of that as agents start to come out. Grokbot's probably the first example of agents that manage agents. Do you think that Jensen Huang is going to be proven right in a lot of those?
Yes.
And do you think that that's going to be a workplace type thing or a personalized thing where even like
both,
you know, the average person is managing a fleet of agents?
I'm managing a fleet of 80
right now.
I have 61 implemented on the financial system, and I think I have 20 on my daily new markdown file that gets emailed to me every morning.
It's pretty wild.
So yes.
You're a young buck, you know that?
I mean, it's not hard. All you have to do is think about it as, okay, I want to build a virtual back office to support me. What do I need? What are the roles that could help me? Tell it to ChatGPT or Anthropic and work on building out those specific agents with those specific tool sets and then create a workflow and orchestrate it, and it just goes. Like, you
There
know,
was something that I heard recently of like the
hold on. Bring up that comment. You don't need 20 agents to aggregate news. If you understood what I was doing, yeah, you do. Like, the way that I have it built out is much different. I have a macro expert. I have an income expert. I have data coming in from so many different areas that I have an entire pipeline, and it touches each individual agent for each specific task. And then all the aggregated data goes to a fact checker, and then it goes to senior editors to all write it up. That goes to a chief of staff to make my final print. Yes, I need a full pipeline. And also, you may not need it, but don't tell me what I don't need, because trust me, I know what I need.
What type of life skills do you think will potentially be very useful in this sort of future world? Leadership skills, like what's going to be the
communication is going to be the most important thing, because I think a lot of people are going to not know how to communicate with other people. I think they're going to get nervous talking to people in the real world. I think this is going to, if we weren't consumed by tablets and phones already, I think this is going to make people even more isolated to a degree.
More isolated?
Yeah.
You think that agents will be able to spark that? I don't know if you've seen any of those things, like people that have like AI girlfriends and stuff. Do you think that?
I mean, that's it's a real problem. It's going to get worse too. But that's not really what I meant. I meant more just if you go to a conference, how do you talk to people? You know, like people went to your meetup. Do you think that kids that are 11 and 12 are going to, that when they're 25, they're going to be that outgoing? I'm not sure. Maybe they are. But I think that so much technology and automating so much stuff is going to impact life skills and has the ability to really impact just communication skills. I think that's what I worry the most about.
Yeah, I'm really excited that I think that there will be this crazy yearn for human connection. Like, I think that's why I continue to do live stream. If I thought that this business was going to be heavily impacted by essentially the ability to create free content, I wouldn't do it. I would pick something else to do. But I have this true belief, and the reason why I still am betting on Reddit and Meta and all, like, I think these are going to be hubs for people to find human connection, not talk to bots, where you see real stutters and real. If you wanted a news report of what happened today, you don't have to go to YouTube to go to Stephen Fiorello's live streams. You can go to freaking ChatGPT, but yet people still don't like doing that. You know, might be a good brush up, but you still want to hear what other humans' opinions of it are.
People still get the newspaper. I was taking a walk the other day, and so I walk every morning now, and somebody was delivering a physical New York Times to one of the houses. I couldn't believe it. Like, who still reads the newspaper?
Yeah, it's wild.
Go to NewYorkTimes.com and read it digitally. Like, who actually reads a newspaper?
Yeah. Yeah, I don't know. And that is the really exciting part of it. Some of these software names, like, I know they're going to be around for a long time because people just, like, we are creatures of habit. You know, sometimes we don't always make the decisions that are the most cost effective or the, you know, most time effective just because we like doing things a certain way. I try not to be that way, but there's definitely things that I do that's constantly, you know, probably not the best way of doing it. Like you, paying for Fable 5 to answer every question that you have.
I mean, everybody, you could say that about everybody, you know?
Yeah. Yeah. Well, Stephen Fiorello.
Well, let me ask you one question before I go.
Yeah.
Anthropic going public. Are you buying?
No comment. I don't know. I don't know the numbers.
I'm buying.
I'm not in a rush to buy.
I'm in a rush to buy.
You know? I hope the numbers are great. If it looks cheap, I'll buy. If it looks expensive, I don't think I'm rushing in to get the model names. You know, I'm sure I'm sure you've been pitched on OpenAI equity before in private markets. Not as much Anthropic. That one actually has been pretty tight, but like, it's not like it's been impossible to get shares of. I
have no interest in OpenAI. I have a lot of interest in Anthropic, and I'm actually considering going back on my words on SpaceX.
Well, I think you should go back on your words on SpaceX. The only thing that I would counter.
Did you buy it?
No, but I think I'm the most bullish out of any of us. Not of any, like Farzad obviously is more bullish than me.
What would get you to buy SpaceX?
A cheaper valuation.
The valuation's my only holdup.
Yeah. Yeah. I mean, do I want to buy a one-of-one company that owns an economy that's growing everything looks great. But the thing is that he said 99% of their revenue is going to come from AI. You know, and they are going to be a hyperscaler. And then he also said, we are going to be an exclusive purchaser of NVIDIA GPUs.
Yeah.
So
why wouldn't you want to own NVIDIA? I get it.
It's a perfect proxy.
Yeah.
No, you win if they win.
Trust me, I get it. Anthropic is the one that I want to take a flyer on sight unseen. Like, obviously, I'm going to read the S1 and do the due diligence, but I don't know if there's anything in there that can get me to change my conviction. And knowing going into it that it could go down 50%, which I would buy more. Like, I'm looking at this as two stages where I have no idea what's going to happen. I certainly don't think this is going to get to a valuation that overtakes Microsoft. And do I think it should go public at $2 trillion? No. I don't think it should be anywhere close to Amazon. That's $2.7 trillion. But once again, if this keeps doing what it is doing, and if Sachs and Gavin and JCal are anywhere near being correct about what the exit ARR is next year, man, this thing is like the unicorn of all unicorns.
I mean, it already is, but like, there's not a single business that looks anywhere near Anthropic. Like, they're gonna have the biggest IPO in history. Like, what even comes close? But yeah, I mean, the 400 billion would be ridiculous. I don't think it'll be that high. I didn't think it'd be 100 billion this year, so I don't know. Who knows?
We'll see.
If it's 400 billion, I mean, Salesforce is dead. Like, if they can come up with something where people are pouring enough money in to bring it to 400 billion in ARR in 5 years, software companies are not surviving. You can't bet on SaaS if you also are betting on Anthropic going to 400 billion in ARR.
I get it.
There's a disconnect there.
I get it.
Ladies and gentlemen, that was the great and powerful Stephen Fiorello. Stephen, I'll put your link in the description down below. Or not description, in the comments. Appreciate you coming on and giving me your can I say sassy commentary? You're always full of attitude.
You can say whatever you want.
There we go. Certified beat me to it. His ex
All right,
there
everyone.
As well.
I will see you later. And by the way, I actually thought the stock forecast was a good name.
So you did see the show?
No, I saw it in the chats.
Oh, for the four of us?
Yeah, they said they asked something about the stock forecast. I think it's a good name.
Thank you.
There's four of you. I think it's good.
You know, we're looking outward. Forecast.
I think it's good. I think it's clever.
All right, man.
Later.
Thanks for coming on. Ladies and gentlemen, the S&P 500 down 0.7%. NASDAQ down 0.9%. Bitcoin, where's that at? We are still up 4.8%, 72,600. Ethereum up 3.5%, 2330. BMNR doing very well. Micron up 3.2%. Wix just climbing. $82 a share, up 5.4%. Huge run. 8Co Holdings also in a big run right now, up 13, nearly 14%. MicroStrategy, Coinbase, many of these names running. I did put Coinbase in the draft. Don't say I didn't. I wasn't bullish on crypto. I put two different crypto names in the draft: Hood and obviously the pure play Coinbase. So we'll see. Finally turns green. I'm only down to 4 names that are red. I think, who else has this many green names? No one. Steve. Why does Matt have a red name? Or SoFi's break even. Wow. He has a gray name. But no, we've got 8 out of 12 positions being green. QXO, obviously the big one that let us down. VRT, Vertiv. Honestly, I think that company's execution has let me down more than I think that the actual play has. The entire AI, the AI space has done extremely well, and they should have been a big beneficiary there, but they missed targets on their earnings. And if they missed earnings, might end up being a bad name. Maybe it gets cut whenever we come up to the draft, time. I'm not sure. I'll have to think about it. Maybe that's sort of the way that I'll keep the energy play going for the data center build out. Who knows? Tanner, why don't you have Hut in the draft or in my portfolio? In the draft, it got picked, I think. I think Chris picked it, but yeah. Okay. Let's see. Ladies and gentlemen, that's it from me. In 15 minutes, Amit starts his stream. Go head over there. Tell them that you really like the name Fourcast. Fourcast. Let them know Tanner sent you. Thank you all so much for watching. Really do appreciate your time. I'll see you guys tomorrow. Bye for now.